Coming up in this show, I'll give you my opening comments on the markets. Arby's going to bring you a sample of our Future Speak member video looking at soybeans using cycle analysis for a trade setup. And I'm going to bring you a hot minute where we look at the US dollar JPY. It could be a great opportunity coming up in gold. And then we'll take a look at the stock market and that period of risk just ahead.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. Let's look back at what happened in the financial markets in the past week and to look forward to what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a choppy week with investors focused mostly on earnings, and still there was a clear bullish bias, as downside blips were seen as buying opportunities, which brought big rebounds and steady buying throughout most of the days. The week started out strong on Monday as Apple got upgraded, and the techs were strong, and the S&P 500 moved up 53 points that day. Tuesday, there was a crazy opening as 80 different stocks were halted and had very wide ranges. There was a technical glitch that messed up our charts as those prices are just all over the place. Indexes were weak early, but Apple moved up and saved it again. Market closed right around unchanged. Wednesday, very wide swings. Microsoft earnings came out, and at first look, they seemed good, and we saw a 10-point upside move after hours on Tuesday. But on the conference call, it was a different story with very weak guidance, especially around Azure, which is the cloud, and the stock turned around and moved down pretty sharply. But then moved up again, or gained back most of those losses as the market recovered. S&P 500 on Wednesday was down 72 points at its worst, and then had 6 hours of gains. Ended up with a small loss on a mixed market, but for traders, it was really an up day and a significant up day because the market opened down so far and then just kept coming back. And it's really points out when you look at that the stock market is very strong, and the stock market got a lift, especially as the bond market moved up on huge demand for 5-year notes. Now the bond market didn't hold those gains and actually moved down again, but it just shows you that investors have a lot of interest in locking in some of these higher interest rates. Thursday, Tesla had a big beat. And there's talk of cost cutting, and the stock soared up 9%. That stock is now up about 50% or more just in a brief period of time. And that helped the techs, and the NASDAQ followed through on the upside. GDP first quarter came out, and the first look at that was up 2.9%. And that was for the fourth quarter, and that was a little bit stronger than what was expected. It was based basically on an inventory adjustment, and that's probably shows that it wasn't quite that strong. And Q1 is going to be weaker based on that. But bonds, they saw that little better number, and they moved down. The dollar moved up small, but the S&P 500 was strong again. Transports were weak on that Southwest debacle, but now we saw them come back also. Market closed on its highs on Thursday, up about 44 points. Friday, the PCE came out, that heavily watched inflation indicator that the Fed just loves to keep their eye on. It was expected to be up 4.4% year over year, and that was exactly where it was. Market started off a little bit weak on the Intel earnings, which were really a disaster. as they had a surprise loss. But then the market firmed again, and it's been choppy here on Friday here as I do this report at around midday. The techs were weaker, but overall the market's still resilient and moved back to the upside again. But now here it is slightly to the downside, and a very mixed market here on Friday. Got help from American Express, which is moving up very sharply, up about 11% on the day right now, as their earnings were great. And a lot of that was spending in Europe, and you've got to wonder whether or not that's all about people getting hammered by inflation, and that probably is going to hurt the consumer later on. So that a good earnings report in American Express very well could be an anomaly. The stock market has moved up as investors gain confidence that the worst is over. And we saw that big decline in 10-year yields and a much weaker dollar. They reflect that confidence by the investors. What they're not factoring in their ebullience is that the weak earnings we've seen and poor guidance is very much going to last a long time. And we could actually be in an earnings recession right now. The Fed's pump is gone, and the good comps that the market expects to be coming fairly soon, well, that could be many quarters away. So the earnings support, which were really false based on them being based on Fed and government stimulus, well, that big growth in earnings that was predicted by so many analysts, well, that's not coming this year. While this upside phase for the indexes looks very strong, as we have good upside momentum, and our indicators have been very reflective of that, that period of risk that we've warned about is just ahead. For clarity, we were looking for the market to rally into and the risk to pick up with a downside phase coming in February and that lasting through April. This rally that we've seen in the market hit our upside targets very nicely in price and time, and maybe even a little bit beyond. And this market could chop around up here as buyers get their fill of stocks. The odds are that very soon, sometime I would say part of February and March, looks like a lot of risk, that we're going to see some very sizable downside days. And that will come as the bulls get a sense that they made another mistake. They get filled up on the long side again, and then they begin to bail. That's likely going to happen, we think, in the next couple of months. But that will be a buying opportunity, because I think that will be the opportunity for 2023. And I think that's the case for commodities and for metals too. We're very bullish on gold and silver, but starting after the correction, which we think is going to come into March. Here at midday, the indexes for the week are up between 2 and 4%, so good, strong week. NASDAQ the strongest as those old growth stocks and beaten up techs do get rebounds. Apple's very strong right now as we see it putting on gains almost every day, and we see that in Tesla also. And the VIX has come down to about 18.40, coming perfectly into the target that we were looking for, where we thought would be the peak in the stock market and the low in VIX. And then we think that's just coming in a number of days. Bond market, 30's down about 1 point, 10-year yields up about 8 basis points. Gold really is this tower of strength, up about $14 on the week. This is the 5th straight week that it's been moving up. And again, I'm going to say we think that there's a correction in all the markets, and that will be a liquidation phase, and we're going to probably see the gold market move down into that March timeframe. I'll show you that as we get later in the show when we look at the stock market index. Silver, much weaker, down about 40 cents on the week, and we think that buying opportunity may be coming around $22, a similar time that we expect gold to be moving down into that buying area. Dollar It is trying to stabilize, but it is very weak. And I tell you that we've been looking for a rebound in here, and I think it's going to be somewhat feeble. When I show you the hot minute coming up, when we look at the US dollar and JPY, you're going to see basically what I think the dollar JPY is going to do. I think the same time frame in the euro, where the dollar is going to get a bounce. But the world is out to get the dollar. And that might be why we see so much weakness and really heavy buying by gold in foreign governments and their central banks. There's something up there. I've got more to say about that in coming shows. Oil down about 38 cents on the week. It rallied up into the resistance area, but it is definitely improved. And we have upgraded our target for a decline into late February, much higher than it was originally. So we'll probably see a pullback during that same period. We see other markets pull back, but at the same time, that is probably not going to be as deep as we originally had thought. All right, so lots coming up. I want you to make sure you go to askSlim.com and explore, subscribe to our website. Make sure that you share. Send this video, if you're watching it on YouTube, to everybody you know that's interested in the markets. We want to get as many people following us as possible. We have really exploded in viewership. Over 36,000 members now to our channel, subscribers. So you might, if you're not a member yet, please do subscribe to that channel. If you're new to askSlim, get acquainted. We're in a level 2 special now that ends Sunday. I'll tell you specifically about that coming up. On YouTube, click the notification bell and do like this video. And on Twitter, follow us at askSlim. And for membership info and questions on our huge offering of education and analysis, write to Matt at askSlim.com. All right, this is a preview of our Future Speak video. This is our most popular video for members. And Arby is going to bring you a sample of that video in which he looks at 24 different futures contracts, shares the cycle analysis on the weekly and the daily chart. So it's 48 different charts that he shows in this fantastic 1-hour show. It's available for level 2 and up members. So again, take advantage of our special we're running for the next 3 days. And he's going to give you a great lesson on using cycle analysis to identify setups. He does a great job in this in the soybean market. Show him this great analysis, RV.
If we go ahead now and shift over to soybeans, again, this is in a corrective period inside of this period of risk, but you can see what's happening. This is forming a higher cycle low versus that old low after this higher high versus the old high. So this is still in a, so far, modest uptrend here on the weekly. If we shift our eyes now to the daily on the right, what do we see? Well, let's go ahead and zoom in. What we would look for here is, I'm going to draw this this fib right here so you can see it drawn from the high to the most recent low. We would watch for this rally into 1505 to 1521 to be where this would fail in and give one more dip down into that next weekly low. That's really what the some of the evidence here favors. There's a low that's due 27 to 217. That would be right in line with what we are looking for on the weekly, and that would imply that this next rally would likely only start towards the later part of February. Okay, but in the interim, watch for just a little flag here and then a move back to the downside.
Super work on that. And you get the idea what I mean, how you can use this analysis for improving your setups. Okay, watch this quickly. This is the hot minute. We're going to look quickly at the US dollar JPY. This is very important because often where the US dollar moves, the gold market and silver market moves in the other direction. Let's take a look here as we look at these charts. On the left is the weekly, on the right is the daily. Let me blow up that weekly quickly for you to see. And you can see the rhythms in here on the bottom. These are the cycle brackets right there. And what we're looking at are positive cycles here and here as our momentum indicator kept showing strength. Then when it turned down here, you got a negatively configured cycle. It says here that a bottom is now ready to form in the US dollar JPY and get a rally maybe up here to the 136, 137 area, but then fail again. This period right in here is a couple of months that the dollar could get stronger. Of course, that would probably mean that the gold market gets weaker temporarily and offers a buying opportunity. Here's the daily chart, and it's been very negative in here, but now it's trying to make a bottom. But still, look at the slim ribbon in here as it moved down and configured negatively. That momentum indicator is fantastic, and the slim ribbon PO giving you these negative signals right over there. This still has work to do, but we are looking for a rally in the US dollar JPY over the next couple months, and then likely giving you a buying opportunity in the gold market. That's it for the hot minute this week. Here comes our stock market analysis, S&P 500. It's actually going to be intermediate term analysis as I'm going to look at the weekly chart. So I have that listed incorrectly. But first, get a ton of our content and analysis for just $29.50. Wow. This is our special. 3 days left to this unbelievable deal. You can get 1 month of our level 2 membership, 50% off. That's just $29.50, and it has all of this information in there. You're going to get our whole video library, over 700 videos, and you'll be able to just binge watch in there. Slimulator momentum tracker, over 1,000 symbols for longer term holders and investors. And then for the shorter term traders, you are going to get our SIR daily live stream. That is short term charts with support, resistance, and the acceleration zones where you're likely to get impulses in either direction. Very excellent look at our reversal scout, which will tell you about the best direction to be in, S&P 500, NASDAQ, and Russell. You're going to get our daily snapshot. Matt puts this together every day, an in-depth analysis of the stock market indexes, weekly ETF review, and of course our trader workbench with lots of tools for you in there. All of that just $29.50. Go to the askSlim.com, top of the front page, click the Learn More button, and there's an example of all of this on that page, and you're going to learn more. And then you have the opportunity to subscribe only through Sunday for $29.50. All right, stock market analysis. We're going to look at the intermediate analysis of the S&P 500. We're going to look at the SPY as the market has moved up in time and price into the zone that we expected. It was just a really, really good analysis after we were so bearish and saw that decline coming through all last year. And each of those upside bounces hit our targets and then failed and then began to move to the downside. So it's been an unbelievable year for our analysis on the stock market. And now we're moving into this period of risk just ahead. So what we anticipate is that the market will get choppy in here, and then eventually within some days or a couple weeks, the sellers will begin to come in as we enter into this period of risk. So let's take a look as we look here at SPY on the weekly chart. And for those of you that are brand new, this is cycle analysis where we have the cycle brackets on the bottom that show us the energies in the market or the heartbeat of the market. And there are 3 cycles in here that are illustrated, 3 different types of energies in there. This is the most dominant holders in the market. This is kind of an intermediate holder in the market. These are the shorter term holders in the market. You can see if you trace out this minor cycle right in here, how the low is right here and here and here and here, all almost perfect, just amazing. This higher bottom right in here that you can see set it up for a test of these highs, and we suppose it could still take out those highs. Now you'll notice in here that there are 2 projections, basically an upside track and a kind of a middle track in there. And this is the middle track. If it's going to fail in this area we had talked about between 403 and 406 right here, that was the area that was our target. Actually, there was one other one around 401 that we thought it might stop at, but this one now looks like an important area. This over here, the higher track, this would be if in the next 1 to 2 weeks it extended the rally. Now, if it did that, then the next spot up there is about 414 or 4140 on the SPX, the S&P 500. That is the area of the major 50. That would be a 50% retracement and slightly above where it got here in the December peaks right over there. So you see it's had all of this upside movement right over here in this rising phase, and then it really has not made it back up to this level. And that's somewhat typical, and it's running out of time. Now, what does that mean? That means that this period of risk, which begins late January through early April, and for those of you that are looking at this on YouTube and don't watch us all of the time, you might have expected that by early January the market would be moving down sharply. That's not what this means, or by late January. What this means is that it opens up a window of risk in here that lasts between January and early April. It could turn down at any point in here or accelerate to the downside. Now, the upper track right in here shows what would be a very bullish case. That would be stopping at somewhere 386 down to around 379 and then begin to move up again. This would mean that the bear market ended over here in October if that happened. Now, again, this is the period of risk, and it could come down and test the lows way down over here at 350. The probabilities of this move down over here have been decreasing. The probabilities of it only testing support and then moving up again and then getting back to these levels of 414 or even up to our target for the year at 430. That's right. If you caught our year-end show, our target for the year is around 430 or 4,300 in the S&P 500. This is just the period of risk right over here. And what I said at the beginning of the show is that this period is likely to give you the buying opportunity for the year. That would be also in many commodities and probably gold and silver, because once this would start to liquidate, then they would all liquidate. Money would just come flying out of everything, and that would probably be the best buying opportunity of the year. That's basically what we expect. Again, the period of risk is just starting. That doesn't mean it goes straight down. When you have this much strength and you see this upward turn right over there in the reversal scout, that tells you that there is good momentum going on in the market. And for those of you that are beta testing our market condition monitor, you can see the strength as it shows up in these indexes. And thank you for all of you that are out there testing that. It's going to be an amazing tool, and I just want you to get queued up for subscribing to that because it will be a huge help to your trading and investing. Right over here now, again, we're opening up the window for this to peak. It could chop around in here for a while before the sellers then begin to come in again. So don't be surprised, because remember, February and March are the period of risk, and even into early April, you see this right over here, these two vertical lines are the timing range for the low to come in. So it's as early as late February and as late as April. You could get a sharp decline in here and it end faster, or decline into the support and it end faster. So we don't know how that's going to shape up. We do know that the highest probability is it's a period of risk. Let's look at other periods of risk in here and see how they shaped up. That is when these cycles go into corrective phases. So you had two of them coming down right over here, and you had the big break off the top. You had two of them coming down here. That was the more dominant one, and you had this big failure from the sell zone right in there. Here you had again the minor and the intermediate, that big sell right in here. So when you look at the distance of the declines, this one was from roughly 480 down to 410. That was about 70 points. This one over here from the sell zone was about 417 down to about 361. So that was 56 points right there. This one here was after a very big attempted rebound from 431 all the way down here to 350. So that was 81 points on the S&P 500. So it's 57 to 81 points. Here you could see if we peak in here and you just have a somewhat average decline, let's just say 60 points. If it's from 406, then that would take you down to into the 350s right over there. And if it only got into support, that would be a very mild decline right there. But still, the timing is right for it, as you can see. You see where all three of them were coming down right over here as the market was super bullish. You even got a decline there from 454 down to 424. So that was a 30-point decline in the SPY. If you take a 30-point decline from here, if it's a very bullish condition, you're going to get down to about 476. 476 is basically right where we have it projected right over here. That's only a 30-point decline, or 300 points in the S&P 500, setting up one of the best buying opportunities I think we'll have. Question is, did the bear market end here, or is it going to end here with a test? In either case, those will likely be the buying opportunities. That's a look at the intermediate patterns in here, and you can see the probabilities are very high for this market to peak and chop around a little bit in here and then get into a period where the risk is much higher to the downside. That's it for our look at the stock market today. I hope that was fantastic for you. Please do take advantage of our level 2 membership. This ends on Sunday. Only 3 more days here on Friday. $29.50 for all of this amazing information. You just click the Learn More button at the top of askSlim.com and you'll learn more. You'll be able to see everything that we're offering to you here for just $29.50. You can watch all of my evergreen videos of everything I taught in here. There's like 300 of them during that period, $29.50. I mean, I have decades of learning that I'm willing to share with you. $29.50. Sign up for that right now. Don't miss this opportunity. All right, that's it. Please become acquainted with us. Sign up for level 2 on YouTube. Subscribe to the channel. Click that notification bell. Give us a thumbs up and watch our member videos in the playlists there with some past shows. On Twitter, follow us at askSlim. And any questions you have, write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and